And so we enter June, when the UK will make the next move to ease its lockdown, with open markets and car retailers start trading again on Monday the 1st of June, and all other non-essential stores are permitted to open as of Monday the 15th. Now that all depends on progress in combating the viral outbreak and a few other things besides though, including retailers' ability to meet government guidelines on social distancing, whether retailers think it's economic to open their full estate of stores, whether staff are happy to return to work or can return to work and feel it's safe, and whether consumers are confident enough to shop, either on health or financial grounds, if they've been furloughed or unlucky enough to lose their job. Now, investors will be looking to see how retailers are preparing and trying to judge early customer response. At the time of recording, the general retailer sector ranks 25th out of the 39 sectors that form the FTSE All-Share, with a year-to-date drop of 20%. But the chart does show some signs of life, with the bottom having been reached on the 23rd of March when global stock markets began to price in light at the end of the COVID tunnel, and the retail sector's up by nearly a third since then. The big macroeconomic news of the week will come on Thursday the 4th of June, with the European Central Bank's latest interest rate decision. President Christine Lagarde has so far held the ECB's headline interest rate at 0, although she did press the print button in March when she extended the ongoing quantitative easing or QE programme with the Pandemic Emergency Purchase Programme or PEPP. Economists and investors will be looking to see if there's any movement on rates or QE, although investors should be happy as €800 billion worth of additional bond buying or PEPP and monetary stimulus looks to have given European equities a lift, even if it's the 2% inflation target remains as elusive as ever, and the EU seems unable to agree on a long-term plan for combating COVID. The Netherlands, Austria, Sweden and Denmark have rejected the Franco-German plan for a €500 billion recovery fund, and the German Constitutional Court is still railing against the QE scheme, fearing it will lead to a federalisation of European debt. In other words, some or all of individual countries' debt is consolidated at EU level, rather like Alexander Hamilton in America with the 1790 Funding Act. Now that worked pretty well in the end, of course, but the Germans fear this will lead to more budgetary profligacy down south, with the north bailing out Greece, Spain and the rest. This is existential stuff for the EU, so anyone with exposure to European assets needs to keep an eye on this debate. Back home, we've got a smattering of scheduled corporate news, although please do bear with me, as the Financial Conduct Authority is still giving companies extra time to prepare their first half or full year results, so some of these dates are potentially subject to change. That said, names which may be worthy of note, either for what they say about that specific firm or the wider economy, include Hollywood Bowl on Monday the 1st of June, Electro Components and Mediclinic International on the 2nd, Wizz Air, Chemring, C&C, SSP and Workspace on the 3rd, FTSE 100 firm Intermediate Capital and also Young's Brewery on the 4th, and finally Biffa on Friday the 5th of June. But for me, the company most capable of causing a fuss in the week ahead is Pennon. The water utility and waste disposal expert is due to report full year results on Thursday the 4th of June. The shares have done very well over the past year, rising by more than 50% despite the wider market carnage caused by the COVID-19 outbreak, and I'd suggest there are three main reasons for that. First, utilities in general enjoyed a bounce when Jeremy Corbyn's Labour Party was defeated in December's general election and the threat of nationalisation was lifted. Second, on the 18th of March, Pennon confirmed it would sell its Viridor waste management business to a private equity-backed consortium for just over £4 billion. Some of that cash will go to pay down debt, some will be kept for investment in the business, and some will be returned to shareholders. And finally, Pennon's operational performance has met expectations. Its investment and pricing plan for its water activities in the southwest of England across the AMP7 cycle, which runs from 2020 to 2025, received fast-track approval from regulator Ofwat. In addition, March's trading statement revealed that financial performance for the full year to the end of March had met management expectations. So, when it comes to the full year numbers themselves, analysts will look to three things. First, an update on that Viridor deal and any further outline of the plan for how the cash receipts will be allocated. Second, the headline pre-tax profit figure, which analysts expect to reach £275 million, up from £260 million a year ago. They're also looking for a steer for the new year, when analysts are actually predicting a drop to £240 million, partly as a result of the new MP7 regulatory cycle and pressure on prices, and also, I assume, the disposal of the waste management business. And third, guidance on a new dividend policy. Now, Pennon increased its first half dividend payment by just over 6%, and for the full year, the market's looking for a 7% advance to 44 pence a share. At the time of recording, that equates to a historic yield of 3.9%, and analysts are penciling in a 7% increase to 45.7p in the new year just begun. However, both United Utilities and Severn Trent have cautioned about non-payment of customer bills thanks to the viral outbreak and the number of people who've been furloughed or lost their job. United Utilities flagged that this could even influence its dividend, so it'll be interesting to see what Pennon says on the topic, especially as it can point to an unbroken string of annual dividend increases that stretches all the way back to 2003, according to data from Refinitiv. I hope that you and your families are all in good health and good spirits during these difficult times. Thank you for listening, and I look forward to talking to you again next week.